Welcome back to Singapore Property Talk Law. The world keeps throwing curveballs, and the latest is this new 10% baseline tariff the U.S. has slapped on all imports.
Yeah, and with the potential for even bigger hits on certain countries, too. It's causing quite a stir.
Exactly.
Yeah.
So today we're zeroing in on one big question for, well, for you, our listeners. As a Singaporean property investor, what could this actually mean for our market here at home?
It's a really crucial question right now.
We've sifted through the details, looked at Property Giant Singapore, those insightful Invest with Pete, and How to Singapore YouTube channels, the Straits Times, and ERA as well, to really try and break down the potential
Yeah,
impacts.
cutting through the noise, basically.
So let's dive in.
Okay, well, what's really striking, I think, is how quickly things have shifted. You had President Trump declaring an economic emergency and almost immediately imposing this tariff.
Citing what? Protecting U.S. industries, wasn't
Yeah.
it? And that trade deficit?
Right, tackling that huge trade deficit over $1 trillion last year, apparently. It signals a pretty significant turn towards protectionism.
And PM Wong has warned us here to brace for more economic shocks because of this shift.
Absolutely. He's been quite clear about that.
Yeah.
And you saw it immediately, didn't you? Global stock markets plunged, which really showed the level of investor concern out there.
Okay, so let's get straight to the heart of it for Singapore then. We're now facing this 10% tariff on basically everything we export to the U.S.
That's the baseline, yes.
Yeah, okay. It's true that some other Asian economies are looking at much, much steeper increases. I saw Cambodia mentioned at a shocking 49%.
Yeah, Cambodia 49%, Vietnam 46%, China potentially even higher, maybe over 54% if you factor in all the potential layers.
So compared to that, 10% might sound less bad. But it still feels like a punch, doesn't it? Especially considering the U.S.-Singapore Free Trade Agreement.
Absolutely, that's a key point. We all understood the USSFTA was about moving towards zero tariffs between our countries. This 10% baseline seems to, well, violate the spirit, if not the letter, of that agreement.
And what about those specific sectors? I heard pharmaceuticals and semiconductors were initially spared.
They were initially, but experts like Chua Hock Bin from Maybank and Dr. Deborah Elms, from the Hinrich Foundation, they've raised valid concerns.
Concerns like?
Well, that these sectors might face tariffs down the line anyway. Perhaps even those higher Section 232 tariffs, the ones linked to national security arguments.
Right, okay. So the initial relief might be temporary.
It potentially could be. And it's fascinating, isn't it, how this seemingly unilateral move could start to unravel these established trade relationships. It could put a real brake on Singapore's economic growth projections.
So how does this global economic ripple effect hit our local property scene? Let's start with something really tangible, the cost of building.
Yeah, that seems to be a key concern across pretty much all the sources we look at. Higher construction costs right here in Singapore.
Because of the tariffs on imported materials, steel, aluminum, that kind of thing.
Exactly, those essential building materials. If the U.S. is taxing imports, the global prices can shift, and costs for importing them here are almost certain to go up for developers.
And it's unlikely developers will just absorb that, right?
Well, probably not all of it. If you connect this to the bigger picture, project financing, developer margins, the more probable outcome is that those higher costs get passed on.
Passed on to buyers.
Passed on to buyers, yeah.
Yeah.
So you, as a potential buyer or investor, could see that reflected in the prices of both residential and commercial properties, especially, I think, in new launches.
That's interesting how much they pass on versus what the market can actually tolerate. That's the question, I guess.
That's the balancing act for them, absolutely.
And didn't Invest with Pete bring up another angle? Potential delays in supply.
Yes, that's another key risk. If these material costs really spike, or even if there's just uncertainty about future costs, some developers might just decide to slow down construction.
Or even put projects on hold.
Potentially, yeah. And given the supply situation we already have, which is pretty tight in both the HDB and private condo markets.
Right, demand has been strong.
Exactly. So any further constriction of new supply could really squeeze the market and, well, potentially push prices up even further. Across the board, possibly, you could see a real bottleneck.
Which brings up an interesting dynamic between the new and resale markets, doesn't it?
It does. If new properties become significantly more expensive because of these tariff-related costs, what happens next?
Buyers might look more towards resale.
You can definitely see a greater influx of buyers turning to the resale market with both HDB flats and private condos. And that increased demand in resale could certainly lead to price appreciation there, too.
And we also heard from How to Singapore, didn't we, about condo downgraders still being a factor in the HDB resale market.
That's right. That trend could continue or even accelerate, adding another layer of demand and potentially impacting resale HDB prices. It's all quite interconnected.
Okay, let's switch gears a bit. Let's think about foreign investment in Singapore property. This is where things seem a bit more nuanced, maybe.
Yeah, the sources paint a slightly more complex picture here. On one hand, you've got the argument that if U.S. tariffs significantly weaken, say, the Chinese economy.
Then Chinese investors might have less cash to spend.
Exactly. Less readily available capital to deploy in overseas property markets. And Singapore's luxury segment has certainly seen significant Chinese investment. So you might expect demand there to soften.
That makes logical sense, but then there's the counterargument.
Right. Both property giant Singapore and Invest with Pete also pointed this out. In times of global economic uncertainty, and these tariffs definitely create uncertainty, Singaporean real estate is often seen as a safe harbor.
The flight to quality.
Precisely.
Mm.
So we might actually witness an increase in demand, especially at the higher end, from investors in both China and the U.S. who are looking for a stable, secure place to park their assets while things are turbulent elsewhere.
It's that classic safe haven appeal that Singapore often benefits from, isn't it? But all our sources also seem to caution against ignoring the bigger picture, the overall sense of global economic instability.
Yeah, you can't ignore that. If this uncertainty persists, or maybe even gets worse, it could make investors from both the U.S. and China just more hesitant overall, more cautious.
Which could dampen demand anyway,
Yeah.
regardless of the safe haven appeal.
Potentially, yes, in both luxury residential and also commercial real estate here.
Mhm.
It's a real balancing act, between seeking safety and just pulling back because you're worried about a broader downturn or recession.
And that risk of a global recession, that's a serious concern, right? Echoed across the How to Singapore analysis and others.
Very much so. These tariffs, they don't exist in a vacuum. They could act as a further drag on global trade, on economic activity worldwide, and that could unfortunately lead to job losses, tighter finances for individuals everywhere.
Making it harder to buy property or even just pay the mortgage you already have.
Exactly. That's the potential downstream impact on households.
And even if we manage to avoid a full-blown recession, Invest with Pete highlighted just the impact of reduced buyer confidence, didn't he?
Yes, just the perception of increased economic risk, that feeling of uncertainty, that alone could be enough to moderate demand for property.
People adopt a wait-and-see approach.
Right, which could put some downward pressure on prices, at least in the short to medium term, even without a major crisis.
Okay, and one more factor here, interest rates. This is always crucial for property.
Always. And the ERA analysis suggested something interesting here. Central banks, like the U.S. Fed and our own MAS, they might actually consider lowering interest rates.
To cushion the blow, to stimulate the economy against these tariffs.
Potentially, yes. Lower borrowing costs make mortgages more affordable, which could give demand a bit of a temporary boost.
But there's a catch, isn't there? The How to Singapore video mentioned inflation.
Yes, the other side of the tariff coin. Tariffs can push up the cost of imported goods, which can lead to inflation. And if inflation starts rising significantly,
Then central banks might be forced to raise rates again.
exactly, to keep inflation in check. So you could have this complex cycle.
Mm-hmm.
Maybe rates dip initially, but then they might have to rise again in the longer run if inflation becomes a problem. And rising rates, of course, tend to cool the property market.
Wow. Okay, so it definitely sounds like there are some pretty significant headwinds, some challenges we need to be aware of.
There certainly are.
But let's pivot now. Let's talk about Singapore's strengths. What do we bring to the table in this kind of environment? Several sources, including Property Giant and ERA, really stress Singapore's enduring strength as a safe haven.
Yes, and that's not just reputation, it's backed by fundamentals. Our stable political system, a robust regulatory framework, our strategic location. These things really matter when the global environment feels uncertain.
And could this tariff situation actually amplify that appeal?
Well, potentially, yes. Think about businesses, especially multinationals, grappling with these new tariff barriers, particularly those affecting China or other parts of Asia.
They might look to move operations, diversify.
Exactly. Diversify their supply chains, maybe establish regional hubs in places they're seen as more stable and perhaps less directly impacted by the highest tariff rates. And Singapore, with our connectivity and pro-business environment.
We could see an uptick in companies setting up shop here.
It's possible, leading to increased demand for commercial spaces, offices, warehouses, logistics facilities. This could actually create a new driver of demand in that particular segment of the property market.
And the Straits Times also pointed out Singapore's potential to really solidify our role as a regional hub, didn't they?
Yes, becoming an even more appealing base for multinationals facing higher tariffs elsewhere in the region, and maybe also acting as a kind of gateway for ASEAN countries looking to export to the U.S., potentially helping our overall trade flows despite the direct tariffs on our own goods.
Finding new pathways in a shifting landscape.
Precisely. And we shouldn't forget the inherent strength of Singapore's domestic residential market, which ERA highlighted. It's generally seen as less speculative, right? More driven by genuine housing needs.
Right, by locals upgrading, forming families.
Exactly. Fundamental demand. Plus, the government has actively used cooling measures over the years. That gives them a valuable toolkit, a set of levers they can pull to manage any significant market volatility caused by these global shocks.
That built-in stability and policy flexibility is a key advantage.
Definitely.
The Straits Times even mentioned something called tariff arbitrage. What's that about?
Ah, that's an interesting one. The idea is, given that Singapore's 10% baseline tariff is, relatively speaking, lower than what some of our neighbors might be facing.
Like the 40–50% figures you mentioned earlier.
Right, so there might be opportunities for businesses to strategically route goods through Singapore to essentially take advantage of that lower rate when the goods eventually head to the U.S.
So we could benefit indirectly from the higher tariffs elsewhere.
Potentially, yeah.
Yeah.
It could create some niche economic advantages for Singapore's logistics and trade sectors.
Okay, so lots of moving parts here. With all these cross-currents, what are the key takeaways? What should you, the Singaporean investor, really be considering right now?
Well, based on what we heard from Invest with Pete and others, one clear point is to be mindful of potential near-term price increases in new property developments.
Because of those higher construction material costs we talked about, steel, aluminum.
Exactly. This isn't just theoretical. It could very realistically translate to higher price tags on upcoming launches. So that's something to watch closely if you're looking at buying new.
Which logically means keeping a close eye on the resale market too.
Absolutely. As those cost pressures potentially build in the new launch segment, you might see, as we discussed, a noticeable increase in buyers turning their attention to resale HDB flats and condos.
Driving up demand and maybe prices there?
Potentially, yes. And you still have that ongoing trend highlighted by How to Singapore of condo owners opting for HDB resale flats, which adds another layer to HDB resale price dynamics.
It also seems crucial to remember the long game, right? Especially with residential property.
Yes, ERA really emphasized this. Property, particularly your home, is often a medium to long-term investment. And Singapore's underlying economic and political fundamentals, despite these global headwinds, remain relatively strong.
That resilience should provide some stability over time.
It should help weather these global fluctuations. It's important not to get too caught up in short-term noise or panic.
Absolutely. And given how fluid this whole global trade situation is, tariffs could change, countries will react. Staying informed seems more critical than ever.
Definitely. Monitoring global economic trends, watching how long these tariffs last, what the broader impact is, how other major economies respond, that's all going to be key.
And on a personal level, how does Singapore mention financial prudence?
Yes, very practical advice. Now might be a good time to just review your emergency savings, make sure you have adequate insurance coverage, just preparing to navigate any potential economic bumps in the road that could arise from this global shift.
Building that buffer.
Building that buffer. And, while the YouTube sources were talking about diversifying personal finances generally, the principle applies broadly. Not putting all your eggs in one basket is usually sound advice in uncertain times.
And finally, one interesting point from Invest with Pete. If you are seriously considering buying maybe a larger or more expensive property,
His suggestion was that acting sooner rather than later might be advantageous.
before those potential construction cost increases get fully baked into asking prices.
Potentially, yes. It's about understanding the possible timeline of these cost impacts hitting the market.
Okay, so wrapping this up, it really seems the impact of these U.S. tariffs on Singapore's property market is, well, complicated, multifaceted.
It really is. You've got challenges, but also potential opportunities. We might see some upward pressure on prices, especially for new builds in the near term due to costs.
But Singapore's fundamental strengths, the safe haven status, our role as a regional hub could offer significant resilience as the global economy kind of readjusts to these new trade realities.
Absolutely. It's about balancing those short-term pressures against the longer-term strengths.
It's definitely a situation that demands close attention, doesn't it? And it's so important for everyone listening to stay informed, really think about your own investment timeline, your own comfort level with risk as these global events keep unfolding.
Couldn't agree more.
What are your initial thoughts on all this? What questions are sort of bubbling up for you about your own property strategy going forward?
Indeed. Well, thank you for joining us on Singapore Property Talk Law for this deep dive into the potential ripple effects of U.S. tariffs on our property market here.
We really encourage you to keep exploring these developments, keep thinking critically, and consider how they might shape your own property decisions down the track.